Hey everybody, it is Rob Keents with goldsilverpros.com. It is freshly 6 p.m. on October 2nd, 2022, about an hour after the precious metals markets have opened here in the US. And I brought on a good friend, Ian from ARC Silver, to discuss what is going on in the markets. We'll get to that in just a moment. I'm going to do a real quick sound check. We're going to give it a couple minutes for everything to load. And while I do that, Ian, how are you doing today? How has your Sunday been?
It's been good, Rob. Thank you. Been hanging out with the dogs, doing a bit of yard work, just chilling out after my birthday yesterday. I think I'm going to extend it and make it a whole birthday month, I think.
Well, happy birthday to you, Ian.
Thank you. Oh, and it's James Forsyth of Silverback Precious Metals. It's his birthday yesterday as well. So.
Oh, it's awesome. Well, congratulations, both you and Jim Forsyth. So a reminder for everybody, we'll get in here in just a moment. The purpose of this live stream is to talk about SilverSqueeze and tight silver inventories. I've been getting calls from wholesalers that we have tight silver inventories. So Ian, being one of those retail providers that works with a lot of different wholesalers in the market, is going to give us his report on what's going on. I think you guys will be pretty interested in what he has to say, as well as I'm going to address a report that I have from a report I have about one of the major wholesalers worldwide in the market and where they are on silver. A quick reminder, there's a poll up. The question is, can or will silver ever be squeezed to the point that real physical market pricing returns? Yes, the squeeze is on 87%. No, it can never be fixed and depends on how much silver I buy. So you guys stop by the poll and answer the poll questions. I'll monitor the stream. Remember, super chats are open. If you want to ask a question, I'll be monitoring that during the course of the call. We'll try to answer questions in the regular chat as well. All right, so without further ado, I think we've given a couple of minutes, Ian, for everybody to get in here. Tell us a little bit about what's going on. You run ARC Silver. You do a lot of silver and gold precious metals deals for people. Tell us what you're seeing on the silver front. Are we really tight on silver inventories, or is there enough available for demand at this time?
Theoretically, it's available. If you want to order and pay for it now and get it in 38 days time, or some product, I've seen January now for Buffalo rounds from some wholesalers.
Okay.
Kilo gold from PAMP is up to 2 weeks. They normally keep hundreds of bars in live inventory. Royal Canadian Mint 1,000-ounce bars. Can't get them. Might be able to get some tomorrow afternoon, I guess. Andy from Miles Franklin has sucked them all up.
Yeah. So there have been a lot of big orders coming in. So we're going to recap some of the really big activity we've seen so far this summer. About maybe 3 weeks to a month ago, Miles Franklin got a $50 million order from a Texas billionairess. And Ian has been getting several big orders as well in the multi-millions, I know, coming through our network. So we're starting to see some of the retailers really get a lot of demand in. And one thing that I got from somebody that I trust in the industry was a report of the available silver to a major wholesaler across the world that supplies a lot of the retailers like yourself. And they're basically 99% out of silver, and they have very limited quantities on anything they are selling. And not only that, Ian, but this has started to extend to gold. A lot of the popular gold is basically out, at least in terms of any quantity at these wholesalers. So I think the wholesalers may be seeing a squeeze in both silver and gold at the moment with what they can get. Is that your viewpoint, or do you feel like there's, if you needed to fill $1 million order today, that you could do it?
I don't know. A few weeks ago, I would be confident you could easily place $1 million in either 1,000-ounce bars or 100-ounce bars in silver. Now it will take some ringing around, and premiums are up at least 25 cents on the 100-ounce bars, which is actually huge, because it's, apart from the 1,000-ounce bars, the lowest premium product. So for it to rise 25 cents, it's like a 1 ounce coin rising $2, which they have done. So combination of things, obviously Queen Elizabeth II dying has caused huge demand for the 2022 Silver Britannias, the 2022 Maples, 2022 Australian Kangaroos. They have literally doubled wholesale premium.
Yep. Double the wholesale premium. Can you say that again?
They actually 2.5 times now on 2022 Britannias, and a lot of the wholesalers are limiting the number. I can only buy 1,000 at a time.
So why do you think they're limiting the number? What does that typically mean?
Well, it's partly because of the huge demand and the uncertainty of the Royal Mint, whether they're going to send any more out, or is they going to hold and wait for Charles II or Charles III, I think. Sorry, I should know, shouldn't I? Oh my gosh, that's terrible. Forgive me, Americans and Brits. But what's happened is that's pulled the price up of the 𝙎𝙀𝙊𝙎, and then that's pulled up the price of every other coin, the Armenian Noah's Arks and the 1 ounce rounds. And now that's filtered through into the 10-ounce bars. They've jumped 80 cents wholesale, which is
so. In what time frame are we talking about all these premiums jumping? Has this just been within the last week or so?
It's been accelerating. It would be 1 or 2 price rises in a week after we had a fair period of stability. Now I'm seeing price rises every day. And before I commit to make a sale, I have to actually check live what the replacement cost is.
Wait, so is it kind of like you have to check if the price has gone up during the day? Is that kind of like in Germany where they got paid in the morning and they had to rush to spend their money before it went down because of inflation?
Well, yeah, they would have somebody waiting, wouldn't they? And the wage earner would take the check and the person would rush to spend it. Are premiums going to stabilize? Well, they've not reached the craziness we had in 2020 yet on the 100-ounce bars. But I won't know till tomorrow morning, when most of the wholesalers, it's very traditional. You call them up and you talk to them. And if they like you, they answer the phone when they're busy. And if they don't, you don't even get to talk to them. So I will find out tomorrow morning. And if the 100-ounce bars have risen again, then I would say the squeeze is on. Okay.
And the 1,000-ounce bars, you may have mentioned this to me. I'm not sure if you mentioned it here, but they went up, was it 35 cents an ounce on the 1,000-ounce bar?
Went up between 25 and 40 cents, depending on the wholesaler, depending on the supply. And each wholesaler has its own idea of spot as well. So yes, there's a big spread in wholesale price and availability.
Yeah, that's something I would like for you to explain, Ian, why different wholesalers have different prices. Does it just have to do with their individual pipelines of getting product in, relationships that they built? Why could there be different spot prices or premiums on product across the industry? I mean, gold is gold, silver is silver. So why do we see that at the retail level, differences in price and premiums?
Well, on the wholesale level, it's relationship. And I guess if you get used to dealing with a certain wholesaler, you might have a line of credit with them. You might just stick with them and pay a bit more. There's a relationship. I'm quite happy paying a bit more with the wholesalers who look after me. In fact, they all look after me, so I try and spread the business around.
Right.
And to a certain extent, it's also free market capitalism, what the market will bear.
Right.
So the shorter the supply, it seems to be the bigger the range of prices. So
which makes sense, because that's the role of the premium, and something you and I have talked about many times on the program. When premiums spike up, it just means it's increased demand from what was there before, and or the spot price on the paper derivative markets is falling at a time when physical demand is increasing, which I think, Ian, from all accounts, everybody I've talked to, and I've talked to a lot of people that buy and sell metal, the purchases this year have been very, very strong, while the price has essentially fallen. Now, it hasn't fallen too high in gold, silver. Let's talk about that for a moment. As I look at gold price over a year, gold has fallen from 1,800 to 1,663. It's down about 7%. Still better than any of the other markets. Silver, I think, is down 13%. It was like 22, and now it's 19. So I think gold and silver have held up pretty well. But when you see silver price falling like it has, $3, and you see increased physical demand, all that does is it gets transmitted or forms the premium, right? Because if the end dealers selling this stuff have so much demand coming in, but the prices are falling, they have to raise those prices to deal with that. Because one, they may have just purchased a bunch of metal from somebody before it fell, But two, I mean, they have inventory costs and storage costs, things like that. The bigger guys do. So yeah, I think premium spiking up is just a symbol of how more robust the physical market is than what's reflected in the spot price on derivatives. Is that the way you see it, or am I a little bit off there?
Well, that was a lot there. Can you boil that down?
Yeah. So essentially, when you have higher premiums, let's say on silver, the premium on a Eagle goes from 10% to 20%, just hypothetically speaking.
Sure.
That means that there's more physical demand that is requiring higher prices that's not reflected in spot. Why? Spot's a separate market traded in derivative over the next 2 to 3 months, and it's basically a gambler's market, paper only. So when you see silver falling $3 year to date from January 1 to now, but you see all the robust demand we've had, the only way to price that out is to build out premiums, right? Premiums have to go up.
Yeah.
Because if spot is falling due to the derivative markets, but physical demand is going bonkers, that's where premiums go up. Is that essentially correct?
Yeah, and it's the complex system of mints, refiners, primary wholesalers, secondary wholesalers, retailers.
Mm-hmm.
So if everybody could buy 1,000-ounce bar, that's what everybody would do. But most people maybe only have $100, $1,000, so they're buying 1-ounce coins, 100-ounce bars. So for premiums to keep rising, it would strongly suggest that the demand is greater than the supply. So there's a bottleneck in the people making the product.
Right. We do know that we've had some complaints of various mints, including the U.S. Mint, not having enough blanks. That it's always hard to tell whether not having enough blanks to do government mint and coins means they just didn't create enough blanks. I think Sunshine Mint at one point was the person responsible for that for the U.S. Mint, and they send the plank stock over. It's either there's not enough silver overall, or maybe they just didn't create enough planks, because they create the planks ahead of time. You got to anticipate demand. So I've always been confused. If the mints run out of silver or gold, it doesn't necessarily mean there isn't enough. It means that there could be a mismatch in their planning of how many they needed, the blanks, or demand may have spiked up and they're trying to get more. But it seems as though the U.S. Mint is just, either way we look at it, the U.S. Mint's not keeping up with demand. That seems pretty obvious.
Yeah, the key thing with the U.S. Mint on the American Silver Eagles, Rob, is that they have a fixed price they're allowed to pay for the blanks. They can't bid higher to get the supply. So Sunshine Mint mint them out of Nevada, the blanks, but they supply the Royal Mint, they supply the South African for the Silver Krugerrands, and they supply numerous other small mints with blanks. Yeah, and make their own product. So they have no reason to increase their supply if they're going to get paid more. If they've got plenty of clients who are willing to pay more to get the silver. Yeah, so that's why the Silver Eagles are in short supply. There's crazy legislation. They can't. It's not a free market for them on purchasing the blanks.
I got you. Okay, so there's some supply chain stuff in there, providers, all that kind of stuff that has to do with the way business is conducted, which
really
can be complicated.
And a lot of people love the Eagle, and a lot of people only want to buy them. But what's not to like about Britannia or a maple? Yeah,
I love maple leafs. They're gorgeous, and I've fallen in love with the 𝙎-𝙊𝙄𝙇, the Krugerrands. I mean, each coin is unique and beautiful, I think, in its own right. And I think I appreciate the beauty for each, especially Ian, because each one is sort of a representative token of the culture of that country. And to me, I love having a little bit of everything. I've sort of, especially very early on in my gold and silver days, I was buying I would buy a Krugerrand, and then I'd buy maple leaf, and then I'd buy an Eagle just to have one of each, and then maybe I'd buy some of the bars, and then I would go back and buy more. But to me, it was just fun collecting all those different designs.
Yeah, and some people have said to me quite clearly, I don't want anything with a queen on. That's fair enough. We'll get a Krugerrand or a Philharmonic then.
Well, who doesn't want something with the queen on it? I think they're gorgeous coins. So what do you think, maybe looking forward a bit, just spitballing, not committing you to predicting anything, but do you suppose, Ian, given the runoff in Comex, the runoff in the London market of available liquid silver that we know of, we're not talking about hidden stores that could exist somewhere. We only deal with the data that we can see. So based on the data we see, world silver inventory's been drained, not completely gone, but have been drained from where they were 2 years ago, when a big influx of silver and gold hit those markets. So whatever was contributed 2 years ago is almost gone. We know we're running shortages according to the Silver Institute and Metals Focus, which does the research, assuming that's correct. We can only assume because it's probably the best research we can find. It's not perfect, but if that is true, we've been running 4 years. At the end of 2022, we have ran 4 straight years of inventory shortages in the miners. So we see that we're not putting enough mining output out. We're starting to drain down the big exchange inventories. Are we at a point where we could really actually hit a physical silver shortage? Because back in SilverSqueeze last year, the last 2 days of January and the first day of February 2021, we know that people went to SLV and 110 million ounces of silver from London was attributed to that. LBMA came out later and said if that went for another week, we may be bankrupt of all available silver. So then people started switching to getting the physical themselves, because in SLV you can't redeem unless you're authorized participant. I know I just reread their prospectus last week. So given all that stuff I just threw out there, and you know all that, do you think we're in a real squeeze this time where I feel as though available inventories on the exchanges last time kind of bailed everybody out, but where is that silver going to go from to bail people out if we really keep going the way we're going? Is there a possibility somebody's got just a big pile of it somewhere, do you think?
Yes, there's a possibility. I think it's incredibly unlikely. Now, what was my train of thought going? So if the Comex registered inventory is an honest statement,
we have to assume that the printed numbers are honest because we don't have the audit report. So
but I mean, but who's the head of the regulator? Was it Roston Benham, Smackdown Benham?
Yeah. Tamp down was the word.
Tamp down Benham.
He tamped down silver at $30 to maintain a normal market, is what he said.
So if that is available, and that's a big if, let's give them the benefit of doubt. Everything they say is registered, is available for sale tomorrow morning.
Yeah.
That's $1 billion of silver, I think, rough calculations. So that's 1 million people spend $1,000 on silver.
Yeah.
It's gone.
It's not much, is it? Because we have 365 million people in the US. And almost 8 billion people worldwide. So it wouldn't take very long to take all that, would it?
No. And I've been saying since I came across the idea of silver for financial privacy and financial security, if I can work it out, there must be hundreds of thousands of other people who've worked it out, what the game is. You just keep buying and holding, and it will do what it's always done.
And those people that are informed, like us and others that have figured it out, even if they're not on YouTube, right, talking about it, there are a lot of people that figured it out, and they're going to buy a bunch. They may buy, 20, 30,000 ounces or whatever the case may be, depending on what they can afford and how much they want to put in it. And so and I think those big guys are buying right now. And I think by the time they're done buying, there's not going to be a lot of gold and silver left for the average everyday Joe, I don't think.
No, I mean, there's some big players coming in. I sell to a retired hedge fund manager a lot of silver. It's like, well, why not they're doing their hedge fund stuff? It's like, because they see there's virtually no upside in almost anything. So they're buying physical silver and taking possession. I've got bank managers and portfolio managers.
I thought it was funny when you told me that the bank manager wanted to buy a bunch of precious metals. And then I thought, okay, now even like the local bankers have figured out that we're kind of screwed, right?
And they can't.
Their product is the dollar and debt, right? That's what a banker does.
At the end of the day, if that goes away,
silver, they know that the dollar debt system is in serious trouble.
And I guess what you do if your whole career, your whole livelihood is based on the fiat system, it's hard to comprehend it. Maybe not coming to an end, but definitely. What's the right word? we might not get a massive reset. I think the chances are we are going to get a big reset.
Yeah.
But even if we don't, more and more people are waking up. You look at, I'm hearing report after report of people taking cash out of the bank and being told limited how much they can take out. If they take too much out, they won't be able to put it back in. The account will be closed. And we know there's only 2 trillion, or there was 2 trillion a few weeks ago. There was 2 trillion of physical notes in the US banking system. Well, that
with a bunch of other trillion hiding somewhere in electronic format.
Yeah, and I think there's about 18 trillion on checking accounts and savings accounts with zero access time to, instant access. So there's 18 trillion cash claims on 2 trillion of physical cash.
Right.
So that I mean, it happened in 2008. The head of NatWest Royal Bank of Scotland went to the Chancellor pleading and said, we've got 45 minutes till we're out of cash. Do something.
45 minutes. Wow.
Yeah, 45 minutes.
It's like literally do something right now or else we're in deep shit.
Yeah, because once that happens, everybody is going to be lining up to take out every cent they can.
Yeah, and part of that, and I discussed this dynamic before. The first time I discussed it was with Lynette saying back about 2 or 3 years ago on her show. When you have the debt dollar system is where debt creates dollars, but because people don't, when debt's created, it's debt. So the majority of the currency is in debt form, not in printed dollar form. So debt is a type of currency in the system, and that's hard for people to wrap their hands around. Banks trade debt all the time. Debt is basically the currency of banks, essentially. And so to a much larger extent than cash, because there's more of it. So we got to a point in which we didn't have enough liquid cash at 2 trillion you're talking about to service all the dollar denominated debt. And that plays into like the repo crisis and other liquidity problems. And I think when we saw a market sell-off this year, dating back to the beginning of January, and in some assets dating back last November, I think what was happening is people were liquidating to get access to dollars or at least extinguish some of their debt. And what that has done is created we've extinguished so many dollars now that there's so much demand for dollars that's why the dollar index is popping up. And I first talked about this about 3 or 4 years ago, 4 years ago, I think. And I started writing articles about 2 to 3 years ago. And I told people this is going to happen. I said, the dollar is going to pop at some point because there's going to be so much demand for it, because there's more debt settlement that has to be taken care of, and there's not enough notes. And the way that the system works is if you don't have notes to extinguish debt, you've got so much debt, then you've got a problem. And that's what we're starting to see. And it's interesting how the central bank is tightening right now in the face of a strong dollar and a lack of available physical dollars, or at least electronic dollars that you can trade. So there is going to be at some point after the currency crisis hit all the other countries, the third world ones or any other first world that's not reserve, then the problems are going to come back to the dollar, I think, at that point. At least that's my view on it. What's your view on that, Ian? Do you have an opinion on that?
Yeah. Oh my gosh.
Kind of like the dollar milkshake theory, but how does that play out? And
well, it seems to be happening, doesn't it? Except that Brent Johnson, wasn't it, the dollar milkshake theory? He did initially say gold would go to $700, and I think he revised it to 1,000. I don't know what his current thing is. From what I'm seeing and talking to other dealers and the wholesalers, the increasing demand for physical metals, is it going to allow, how far can spot detach for any?
That's the magic question. Like,
that's the magic question.
What is the Maginot line for where spot can be off of the premiums, right?
And I know people. I know a particular billionaire who is now drawing contracts off the Comex regularly. He will just up if that gap opens up, because then that arbitrage becomes, if you can take your contract off and say your cost to $2,000-3,000 to take 5,000 ounces, but you can make 10,000 markup. Heck, you just say, okay, if it was me, I had the $1 billion, say, okay, I'll take the lot. If I can make 10%, I'll take it all now.
Why wouldn't you? Because that's almost not quite, but almost a risk-free return given the market. And and that's a large reason probably Comex is being drained at this point in time as well.
I would say it is risk-free, because if you bought the $1 billion that's left of physical silver off the Comex, you would
Well, then it'd
set
be
the
worth a lot
price.
more, wouldn't it? At that
You would
point?
set the price.
Yeah, you would.
If you've got $1 billion, so anybody watching, if you know anybody of $1 billion spare dollars, just tell them. If you want to double or treble your purchasing power, just go buy what's left of the silver, because you will then control the market. So you can name your price. You can say, okay, it's $50 now. And what's anybody going to do about it? Because if anybody says, well, we'll wait till more bars come on the Comex, well, you're in there taking them off before they can. You can go around all of the wholesalers and you say, I will pay you 20 cents, 30 cents over what you're asking for every 1,000 ounce bar. It would be so easy. The only downside is you'd get attacked, like Warren Buffett was with his 2 large silver holdings, and like the Hunt brothers were. That's the risk. You would become enemy number 1 of the deep state and the financial system. So, yeah, you might need your own private army, and you might need to have no exposure, no leverage on anything anywhere.
I want to show something on Nick Laird's site, Gold Charts R Us. This is silver value held in, this is total all ounces. Let's do iShares SLV. Oops. I'll get it right. Here we go. Okay, so this is iShares SLV silver ounces. Make this a little bit bigger. All right. We can see this is the London silver, and we can see basically since the pandemic, this is, I mean, the millions of ounces have come down, right?
Yeah.
It was almost 700 million ounces. Now it's at 481. So the SLV ETF, silver ETF, is down, what is that, 219 million ounces, almost a third.
And is this audited, Rob? Is this audited? Because isn't JP Morgan the custodian of SLV?
Oh yeah, we're just looking at the published numbers. I'm assuming the published numbers are accurate.
Is there anything they do honestly?
I don't know. They've been fined.
I don't know.
Fined.
You know,
for the precious metals market, probably not.
I mean, is it JP Morgan or even the correspondent bank for the Russian Gazprom, aren't they? They're the correspondent bank.
Yeah.
So they're helping the Russians out at the moment.
Yeah, and the thing about SLV, and we'll talk about it a little bit here, and I'm going to do like a 2-part series on the SLV, I think, starting next week. But the thing about the SLV is and I reread the prospectus about a week and a half ago when I was down in Mexico, and the entire thing, I read it through twice. It says explicitly only authorized participants can create or redeem baskets of shares. If you're an individual shareholder, even if you had 1 million shares, you can't. They have to be done in 50,000 share blocks. And when you issue new shares, you have to back it with metal. If you want to pull the metal out, you have to sell shares. So with what's happening is there has been a tremendous amount of selling pressure on SLV. They're almost 60 million shares short. In fact, it was 60 million at one point. Now it's like 59 million shorted on SLV. And what that does is it keeps the price down. And what I have figured out is when people destroy baskets of SLV stock, that would have less overall stock available to the retail stock investor that wants access to SLV. The price should rise. But what the authorized participants are doing is they're selling, or they're redeeming those shares of stock and pulling the metal out. And so I think the short covering has provided them some cover to do it. In other words, the short covering has kept the price down while this redemption's occurring. Now, what the authorized participants are redeeming for, we can only guess. We don't know. Well, all I have is the chart, and I have the prospectus that tells us how it's supposed to work. And assuming everything goes according to the prospectus and there's no malfeasance or mistakes, then that means authorized participants, which are JP Morgan and those types of companies, are pulling silver out of SLV. Now, who does that go to? We don't know. I mean, I know JP Morgan and these other companies are doing it, and we can, we can put that, we can come back on the channel, and when I do my SLV series, we'll talk about all the participants in that market. But JP Morgan being one of the big ones, to just use them as a proxy. When those authorized participants are pulling silver off that market, who does that going to? We don't know. And we don't know the same thing on Comex, and we don't know the same thing in the OTC market. They're opaque. We don't have transactional data. We just have flows. We just have data flows at the top level. So we don't know who's taking it. We could speculate that it's arbitrage, like you said. It could be the Chinese wanting it for their economy. It could be, it could be the Indians. They've been importing a crap ton of silver lately because they put restrictions on gold in their country. So now people have gone to silver. So there are lots of things going on and where that silver could be going, but at the end of the day, the silver is going. That's the important thing, isn't it? Or do we have to care who it's going to?
No, but I do know, talking to the one of the leading New York wholesalers on Thursday, the manufacturers of bars and coins are scouring the secondary market to get 1,000-ounce bars.
Yeah.
So that's caused a shortage.
Okay.
And in the 2 years and 3 months I've been doing this, there's never been a shortage of 1,000-ounce bars. And the premium has now doubled since when I started. The wholesale premium.
There never was a shortage. And I remember my premium when I bought that 1,000-ounce bar from you was at October, year and a half ago. Was it a year and a half ago already?
It was Halloween last year.
Oh, it was last year. Okay, good. I think we got it for 99 cents over spot or something like that. And now it's what? Is it like $1.70, $1.80?
My price range as of 2 hours ago, when I last sold some, was 115 to 124.
Okay. But that's the price you're getting it at. What would somebody?
No, that's what I'm retailing at.
Oh, you're retailing. Okay.
I'm retailing between 115 and 124. Most companies are 149 and then up into stupid money, $2-3.
Yeah. I see some retailers take advantage and go over $2, an ounce. But honestly, on a 1,000-ounce bar, that's kind of silly.
It is very silly. Yeah.
Okay, so it looks like we're short. Again, just to recap for everybody, Ian runs Arc Silver and has relationships with many wholesalers who he gets metal through. He's noticing the inventories are getting much tighter on silver, something we talked about earlier this weekend. Also reached out to a couple other retail dealers that I know. And I know for a fact that one of the wholesalers that serves worldwide is 99% out of silver, at least according to the info I got yesterday. And they're starting to not have a lot of free gold available, and everything seems to be back ordered. Ian, at the current pace, just a guesstimate, would if things keep going like they're going for another month, is everything on back order, or like how much is actually there?
Yeah, I mean, I've heard figures of as little as 60 million live inventory in the US retail business. So that could go in, I don't know, half an hour, I guess. I've noticed a lot of the online sites are limiting the orders on particular products.
Order sizes, right?
And also the premium rise, you would have thought it would be putting people off, but it doesn't seem to be putting people off because spot is low. I mean, okay. My first order when we started July 2020, we bought 1,000 2020 maples.
Yeah.
And they cost us $30,000. So a maple is still cheaper than it was in July 2020.
Yeah. And that doesn't make any sense whatsoever.
Doesn't make any sense when you think of the devaluation we've had, the debasement of the dollar. What we lost 30% purchasing power in the dollar probably in 2 years, I would have thought.
So wait a minute. So silver, even with higher premiums on all the coins, is still cheaper.
They're still cheaper than they were in July.
Okay, with the inventory situation, that makes no, and with 4 straight years of being short of mine production, that makes no damn sense.
Well, it does.
Hold on a second. Yeah. That's a scarcity, Ian. Why is the market not? Yeah. Why is the market not pricing that in? We have an obvious scarcity according to all the data that's publicly available. We have scarcity. So unless everybody in the market has shadow data that they ain't sharing with us and that they know we're running low on silver, period, why would price not be higher than it was 2 years ago? It doesn't make sense.
One key point, and I won't mention his second name, but my friend John a few weeks ago said to me, explain to me why silver is such a good bet when it's so volatile. So we are getting, and I think Mineko64 said, we are getting confiscation because people are too scared to buy because the volatility is so crazy.
Yeah.
I mean, 2020, we went, didn't we, down from 18 to 11 and up to 30. And now we're at, we've touched 27. Now we're at 19. And most people look at that as that's way too volatile. you know, although they will buy Bitcoin at 668, and now it's what, 19, and they'll buy
19.
the S&P. They'll buy the dips all the way down, 29% down on the common bond funds, 25% down on the Nasdaq.
Well, the 2-year U.S. Treasury is at like 4.24%, I think I just looked at, and the 10-year is creeping up to 4. Still in a yield curve inversion, which is not good, predicting a major recession. But I mean, how does the government service their debt at 4% on the 2 main bond issuances, 2 and 10-year? I don't know how you do that.
How are they going to do it at 10%, Rob? Because that's where the Fed's going, and I'm bucking the trend, and I'm stating, in my very strong opinion, the Fed's not going to pivot.
You don't think at all? You don't think
No.
when they get to 4.4%, they're going to turn around? They're just going to keep on motoring?
Who are they acting in whose interest are they acting?
The
beneficial owners,
private banks that own their shares.
We don't even know who owns the Federal Reserve,
No,
do we?
we don't.
We don't even know. So why would they act in anybody's interest apart from their own?
They'll probably act in the interest, I think, because they have that franchise, the US dollar. They've wanted to maintain that franchise somewhat healthy until it kicks the bucket and dies.
But what if they know? What if they know it's dead? Factually, the dollar is dead. Logic tells us the dollar is dead. We've debased it to oblivion. So they know we're close to it being absolutely dead as a dodo.
Yeah, they know because they created the system, and they know how it works, and they have all the data. You can't convince me the Fed doesn't know everything that's going on in the economy. They know it all. They don't speak about it because their central bank, who is not really a government entity. Yes, there are people chosen, appointed by the government, but it's from a list usually provided by the Fed. So it's a self-perpetuating management of it's not even governmental. Some people say quasi-governmental. I disagree. It's not governmental at all. They know it's the end of the dollar. So at the end of the day, they don't want to crash the system because they get interest on all the dollar, right? So they make money on the issuance of currency, which is not theirs. That system has generated untold amounts of wealth. They don't want to destroy it until it's ready to be destroyed.
Let me pause you there, Rob. It has not generated diddly squat. It's stolen from the effort of people's work.
It's been siphoned off and embezzled.
The Federal Reserve never made anything. They just steal.
I think it's been siphoned off, stolen, all of that kind of stuff. But my point being, I'm going to finally get to it. They're not going to crash the system until they want to. They'll crash it when there's no more stuff. There's no more blood to get out of the turnip.
Nothing to extract.
Yeah. And so the question then is, how close are we to that? If we're really close to that, then where the dollar is just dead. Because look, the dollar's dead either way. So at some point, the Fed's going to pull the punch bowl and they'll have a damn choice, because they don't want a hyperinflationary melt off. And well, I'm sorry, they don't want a deflationary depression, and they're going to print the money, and they know that's going to kill it. And they know that's coming. They know the stages. They understand fiat currencies. How close are we to that? Because we haven't, looking at it from an economic standpoint, yes, we are receding, negative GDP, all that stuff. And I think if you are honest about inflation, we've had negative GDP for much longer than the government's reported, because inflation pulls down the value of our production, and their inflation indicators suck. But just assuming the government data is fine, we haven't hit that big deflationary depression yet. So I still think that there's a little bit of time before the Fed brings out the helicopter. So I think the dollar has a wee bit of life left. As to how much, I don't know. It depends on when that big deflationary event occurs. And it's not just going to be one in the US, it's going to be worldwide. So I'm trying to pay attention to politics, what's going on, world economics, to try to figure all this out. But it's a really, really complex puzzle. And at the end of the day, I don't think anybody knows the exact day in which all this is going to happen. The only thing we know is it's traditionally happened. And that's the way the system was designed to be self-defeating at the end of the day. It would eventually was going to collapse. It's a Ponzi system. So, but are we close to that? Because we haven't hit the big deflationary depression yet. So I feel as though we have to hit that they have almost 5% interest, not quite, but by the end of this year, 4.4. So I think that's the Fed's admission we're in a recession. They think those 4.4 percentage points is going to be enough. I don't think it'd be near enough if they need to start cutting. You're saying they're not going to pivot at all. They're just going to run it until they catch up with interest rates.
Yeah.
But any path you look there, whatever the path tree is, it doesn't look like a good path. It doesn't look like the dollar is going to survive any which way we look at it.
No, it's going to dramatically lose purchasing power, probably pretty soon. How long a country is going to send their stuff to us?
Right.
Yeah, whilst the dollar's strengthening, it does put us in a sweet spot.
It does.
And especially the precious metal buyers. I mean, if you're earning, especially if you're earning in dollars, and the precious metals are the lowest they've ever been in real terms ever, in dollar terms. But yeah, timing, I think we're close. Why would the Vatican order or request all of its dioceses around the world to send all their fiat, surplus fiat, to the Vatican Bank by the end of last month? Now, this is speculation, but it's fairly, I think it's educated speculation. I think what we're going to see the Western financial leaders and governments get together, and they're going to agree a unilateral currency devaluation against gold. And that will bail them out temporarily. Because they're insolvent. All the central banks are now completely insolvent because they carry so much bond debt, which has now lost 50% of its value. They call it unrealized losses, but if you mark to market their balance sheets, they are bankrupt by trillions, all of them. If they revalued gold and say we have got 8,000 tons, they put it at $20,000, $50,000, whatever they want, suddenly they can maintain everything. Everything would go calm for a while, and we would be very happy as precious metals holders. And everybody who isn't a precious metal holders will be too scared to buy gold at $20,000 because last week it was 1,640. It's like that. I think there's an even chance of that happening in the next month or so. And we've got precedent in 1984, the Plaza Accord. It was agreed with the Western banking system that the dollar would be devalued simultaneously 16%. Well, how do you devalue a currency? You know, let's presume gold is always a standard value.
Right.
Well, you do it against gold. What have all central banks?
It's always been done against gold. That is tradition in
history.
It's always been done against gold.
Yeah. Canada will be, I guess it'll be okay because they'll just be able to seize all the gold mines. Britain's
nationalizations could spike up, not to set a fear into people, because we do cover mining stocks, but I do think in certain places, if gold and silver is underpinning, this gold especially is underpinning the banking system, and silver is underpinning the economy as an industrial metal and as monetary metal, then at some point they would probably either nationalize a mine or just buy all their output for the next 5 years. Like I could see them just saying, I'll buy your output at a reduced rate. We'll buy all of it. We'll guarantee sales, but we're giving you $5 less in spot. And the miners will probably do that because it takes away their uncertainty. And that's the way a government could get the metal cheaper than you can probably get it on the Comex.
Yeah, or there'll be ESG reasons why they have to pay for this, pay for that. There'll be
taxes,
taxation. It'll be, you know, they can do a lot of control of that. And I think from reading a while back, Bolivia has already done that with all the mines in Bolivia. They have to sell to the government and receive bolivar at the price that the government says. But yeah, what are the chances? I would say there's a 30 to 50% chance that within a month or two, there'll be such financial chaos, such contagion. I mean, Britain struggling, nearly blew up. They had to create £80 billion out of nowhere to bail out the pension fund.
Let's talk about that for a minute. So the pound is at parity with the dollar was last week for the first time in forever. And the bond market was blowing out. And aren't they having really high inflation as well? What's going on in the UK?
Yeah, I mean, government saying 10% inflation. It was the pension funds that were having to. They chose to go use leverage to try and get 7-8% return.
Of course.
So the private banks gave them a margin call that was bankrupting the pension companies. So that was the reason for the 80 billion, creating 80 billion pounds out of nowhere to bail that out. But Britain is comparatively stable when you look at Deutsche Bank, Commerzbank, Societe Generale, Credit Suisse. I mean, they are basket cases. Just once one of those falls, give it a few hours, and the dominoes will be falling in New York and across the US in the banking industry, because they're so interwoven. I don't think they even know how interwoven they are. So if that starts to happen, what an excuse. Okay, we'll have a long weekend, we'll all get together, gold is $10,000, everything's fine, nothing to see here.
Yeah, it's going to be, they usually do it over the weekends and things like that. And then people wake up on Monday and it's in the news. Yeah. And it's like, oh, you know, back to real life. And oh, by the way,
then throw in, the bad old Russia does a cyber attack on the Western banking system. You know, throw that in as well. Maybe throw in a dirty nuclear bomb somewhere to make it look like Russia's,
or hack the pipelines. Hack the pipelines, because when I was out in Virginia last year, somebody hacked the pipeline. I think it might have been China, but they never came out and said. Hacked the pipeline, stopped the flow of gas to the East Coast, and we all ran out of gas, and we're all just sitting there going, we can't go to the grocery store. Yeah, and that was a cyber attack. It didn't cost them hardly anything.
What I read about that, Rob, it was like it's not hackable because they're not connected. There was no connection to the internet.
Well, suppose excuse me for a moment. Excuse me, my allergies. Supposedly these are all SCADA or older technology system, proprietary type systems. Think mainframe. It's not really mainframe, but think mainframe. Just for frame of reference for non-tech people. Older types of technology that tend to run these systems, or very proprietary types of technology that run these systems. And so, yeah, I don't know if they're completely disconnected, because there's going to be there has to be control.
Yeah.
So it can't be completely air gapped. Yeah. Because the systems that control the pipeline need to be controlled by a central authority. Yeah. So there's a way in. Now, whether those terminals that have access to maintain the electronic management system for that pipeline is air gapped, I don't know, but I assume that there's a way. Just knowing system administrators, having previously been one and being a cybersecurity guy, usually there is a way into that offsite, because let's say your sysadmin goes on holiday, or he's at home and something blows up, they're gonna open a command line interface, you know, get telnet in or you know, whatever technology they're using. They're gonna get in and they're gonna run, you know, do some stuff remotely. So I don't think any control system is 100% air gapped. Now they could have controls in place, but still, if there's any connection to the internet, it can be hacked for the most part.
Yeah, and from what I understand, my limited understanding of code and programming, and I have a lifelong friend who's a code writer pretty high up in the UK. I asked him what happens if something goes wrong. He said, "Oh, we always leave a back door."
Yes, always.
So every programmer has a back door that no one knows about apart from them, and it's usually a lot easier to find and get in than the front door. So probably your average 12-year-old with an iPad could hack most of it.
There's software, you know, I was in cyber for a long time. We'll make this real quick. There's software out there that you can buy for a few $1,000s, that has certain exploits built in for common types of technology like Windows, Linux, all these, you know, different apps. And you can just point and fire it. So for a couple of grand, you can just be a regular user or a script kiddie with a little bit of knowledge, and you can aim these tools at common technology, which is used everywhere, and you can find ways in. Now, you may have to have a lot of expertise to utilize that, to do something with it. But the point is, we know, the FBI knows, the government knows, because these studies were done by the government, that there is software out there that and I've seen the software, that allows people to blast out attacks which don't require technical knowledge. So it's not as though you have to have advanced hackers to do bad stuff. I mean, you can have people that have relatively, you know, light depths of knowledge, but they have a little money on their hand and they can compromise it. Real quick question, Ian. Steve Wojdas asks, Rob and Ian, could we retest the March 2020 lows in PM prices and stock markets? What do you think, Ian? I'll just let you talk about the PM.
Well, I've been pretty rubbish at predicting the spot price. But I do remember when it hit $11 for a day or so. The cheapest I could buy, and I was buying retail. I was buying retail then. That was April 2020. The cheapest I could buy was 17, and I had to wait 8 weeks for it, or 9 weeks. So yes, it's possible. Yeah.
Okay. Thank you, Steve, for the question and for the super chat. We appreciate it. We're going to go ahead and get wrapped up here, guys, because we're about 50 minutes. We really just wanted this to be somewhere around market opening on Sunday, a discussion of SilverSqueeze, because we think that the inventories are getting really tight. At least that's what the wholesalers are reporting. And we're starting to see inventory, or have been saying for a year and a half, inventories run off the major exchanges. At some point, that's going to break if demand keeps going like it is. Of course, given the geopolitical, economic, world situation, it seems as though there's going to be a lot more demand for metals. And just to recap, Ian was reporting that silver inventories are getting tighter. I have a report from a major wholesaler worldwide that shows they're about 99% out of silver, and gold is starting to be taken off as well. Of course, that's going to increase premiums for people. So if you're on a budget, obviously it's always better to get lower spot and lower premiums when you can. In the silver market, that can be tough to do, but Ian does a great job of that at ARC Silver. Ian, can you let people know how they can contact you if they're interested in getting any silver or gold from you and from ARC Silver?
Yeah, arcsilver.com. You can email, phone or text. My phone number's on there. We have created, along with silver precious metals, we have made a route around the traditional manufacturing of the mints, doing the slices, and now casting bars from the 1,000-ounce bars.
Okay.
So hopefully with silver-backed precious metals and what we're doing here, we're actually creating product outside of the traditional system. So we shouldn't be as squeezed as long as Jim can keep on casting those bars up.
As long as you get 1,000-ounce bars, you guys may be the last providers of supply at some point. And that's critical for people to know. Not only are you doing a great job in keeping premiums down for people, because that's your business model, you did it on purpose with the intent of getting silver into as many hands as people. You also may have some of the last silver available when it all comes down to it, because the way that you guys are managing that market. So that's good information to know. We're going to go ahead and wrap this one up. Guys, stay tuned. We got lots of other videos after this one. I fully recommend you go to the Perth Mint series and watch that one. Also watch the new series I just started on the CFTC's regulation of the commodities markets. I think you're going to find that very interesting. I had the opportunity to interview Assistant Deputy Director who used to work there, who came to the conference, and I think you'll find that information very interesting. Ian, thank you so much for joining us. We'll have you on the program again. Have a good rest of Sunday, sir.
Thank you, Rob, and you.
And to everyone else, thank you for joining the program. We appreciate it. We're going to go and end this one. Stay on the channel. Look at that content that we have. I think you're really going to like it. Until next time, this is Rob 𝙂𝙊𝙇𝘶 with Gold Silver Pros.